Welcome back to We Make Money Fun. I am your host, Shanna Reed, and I have Jean Pomeroy back with us today from Coldwell Banker. Welcome back, Jean.
Thank you. Thanks for having me.
We are excited today to talk all things real estate, interest rates, and election years, and inventory. Just where should we start? There's so much noise out there. What should we pay attention to?
There's a lot of talk, and there's a lot of talk nationally, but locally is really where we want to look here in Arizona. And I will say this. So I'm a 26-year broker. I've been through a few elections in this business. And I will tell you that for myself, not everybody has the same experience, but for myself, right around July, August, in election year, things typically start to slow down. And I hear people say, we're going to wait until after the election.
Mm,
And that's very common. I see that every 4 years, and this year is not like that for me. Now, I'm not saying that other agents aren't experiencing that, but I've been quite busy this year. And I don't know that I can attribute all of it to this, but I will say that there are many people that are understanding that there's change in the wind. And do you want to be on the other side of that, or do you want to be ahead of that curve? And right now, being ahead of that curve in real estate for a buyer is something that people really need to consider. So, we had a little blip in the stock market, as you are more than aware,
yes, I
the
am.
other day. And what I heard on the news was people talking about the fact that maybe this would cause a slight recession, that it's the Fed's fault for waiting too long to reduce the interest rates. And very frankly, in real estate, the stock market going down, a slight recession, and the Fed's lowering the rate are all good for real estate.
Yes.
That is on the horizon, folks. The feds have already said that they were considering cutting rates. They use those words. Now, with that being said, when the feds cut rates, are they cutting mortgage interest rates? No. They're cutting the Fed funds rate. That's a bank rate. That's not directly tied to a 30-year mortgage, let's say. However, that affects other indices, and it affects the bond market. And the bond market is what the mortgages are, the rates are based off of. So, with that being said, and all of the indications, I have no crystal ball, but I'm smart enough to understand that that probably means that in the latter part of this year of 2024, rates are going to come down. Buyers have been on the fence for a year, maybe even a year and a half. There is a ton of pent up demand. There is not a ton of inventory, although our inventory has raised a little bit because things have slowed a little bit. And there are a gaggle of sellers. They're like, oh, I have a 3.5% rate. And even though I have 5 kids and a 2 bedroom, I don't feel comfortable moving. But I'll tell you what, once that rate comes down a little, if we see 6.5 or low sixes, or if there happens to be a 5 in the front, boy, it'd be a high five. It's not going to go lower than 5. I can tell you that right now. But even if there's a high fives to low sixes, people are going to come out of the woodwork. Does anybody remember 2021?
Mm,
When people come out of the woodwork, and the inventory that we have, that's not a ton, it's a little more than we had, but we have low inventory, and that all gets sucked up, prices are going up. You really don't have to be very versed in interest rates and real estate market to understand supply and demand.
mm.
So people that are considering a purchase, especially like if you're a renter right now and you don't have a house to sell, boy, my goodness, now is the time, because you can get so much more house now than you will be able to probably within 6 months, and more than likely in a year. Now is really the time to purchase.
Got it. So one of the things that I've been hearing for the last year and a half, and I'm sure you're really tired of this, but I think it's important to bring it up, is you marry the house, you date the rate, right? Uh,
Amen. That's it.
so explain to those listening exactly what that means.
It's kind of funny because I almost said that right before. I took a little break. What that means is that, yes, the rates, and depending what day you see this, I have no idea what the rates are going to be. Okay, but let's call it low sevens. Let's say you purchase and the rate is low sevens. Well, then 6 months from now it gets to high sixes to mid sixes, and maybe this time next year it's low sixes. Now you have the opportunity. You got in on a low price for the house, and now you have the opportunity to refinance and have that low rate as well. Where if you had waited, even though you have a lower rate, your payment might be higher because you had to pay so much more for the house. So if you can get in now, even if the rate is a little higher, get through that time period as the rates start to come back down, then you'll be able to get in on it and you make out on both sides.
Got it. Okay. So the rate, even though you're taking out a 30-year mortgage or a 15-year mortgage or whatever the rate, whatever the term is that you select, that doesn't mean you're stuck, right? If rates
Does
come
not mean you're
down,
stuck.
you can refinance and take advantage of that lower rate.
Absolutely. And there is a charge. That's not free. There is a charge, but for the few $1,000s that you would spend on a refinance, if you look at what you made out by getting the house at a lower price, you will have made out in the long run.
Got it. Okay, that totally makes sense. Is it typical in an election year that rates come down right around or after the election, or is this something that's unusual because of this election year?
It can. It's really hard to say. It depends on what's going on in the economy prior to the election. But certainly, even if there wasn't an election this year, this would be going on because of the fact that we dealt with COVID, we dealt with the rising interest rates, we dealt with all the economic impact of everything that's going on, and the prices going up, and people not being able to afford eggs and groceries, and the all of the food costs that are going on. All of those things have put the economy in a place where that rising interest rate really has been going on for enough time that it's having its effects in other ways, including the stock market at this point.
Yep.
And it would have had the Feds lowering at this point anyway. So whether that is because of the election or not, did it add to it? Probably, but certainly this would be happening one way or the other.
That totally makes sense. So what do you say to those folks that say something to you, something to the effect of, if so and so gets elected, I don't want to buy a house, right? The economy is going to crash. Like, I'm just going to wait and see what happens with the elections, because if so and so is elected or isn't elected, things are going to drastically change.
I don't have it doesn't matter what you think, you should do it now. I'm not out to push people to do things that they don't want to. But what I would do is say, if you decided to purchase now, what would that look like? Let's look at the houses that you're looking at just on the MLS, and let's look at that price, and let's watch that, and let's see if you made out or you didn't. And I'll tell you that I have more people. I'm very fortunate that my clients are smart enough to know that they hired somebody with some intelligence and some experience, and they listen very often to my suggestions. So I don't have this happen always, but once in a while I'll have someone say, nah, I'm just going to wait it out. And really 9 times out of 10, they come back and say, boy, I really wish I had listened to you, because now I can't afford as much as I could before. I can't have the house that I could have bought before because now it's out of my price range. And you're talking about everyday living and enjoyment of life. This is not just an investment. This is having a roof over your head. And when we get a hot market, if you are not a cash buyer, you really may have trouble just finding a house, because just like when we've had these booming markets before, the cash buyers get the houses first, and the people with the loans, it's harder and harder to get in. So it could be a matter of just finding a house for you, not finding the perfect house. And the ideal situation is to find the perfect house at the best price.
Yeah, that's for sure. And to say nothing of contingencies, right? If they have something to sell, or any of those things, if you were at all around the real estate market in 21 and you saw escalation clauses and all of those things, it just we could end up back there if we're not careful, I think, is what I hear you saying.
Absolutely. And in the last podcast that we did, we talked about the changes with buyers and compensation for the buyer's broker. And if it's a hot market and it's a seller's market, sellers aren't going to be putting any money towards the buyer's agent, and there's another fee that the buyer is going to have to pay, where now that is something that it's very typical, and quite often the seller will be paying all or a part of the buyer's agent fee. So these are all things that change based on market, and that market could very well be around the corner.
Oh, wow. That's really, really great feedback, Jean. And for those of you that didn't hear the previous podcast that Jean just referenced, go back and listen to that one if you want to know all about the National Association of Realtors settlement and how that impacts buyers and sellers, because the times they are a changing.
For sure.
So go listen to that. And if you would like to reach out to Jean, I will put her information in the show notes so that you know how to reach her. And if you would like to talk to us at Heritage Financial Strategies, go to heritagefinancialaz.com, click schedule the consultation, and we'd be happy to chat. Jean, as always, it's been great talking to you. Thanks for being here.
My pleasure. Thanks for having me.